Hi, this is Tim. Welcome back to the Finest Education Center. Can you lose money in a CD? Can you lose money in a safe government bond? You may have been told no, but the reality is there are risks associated with what you may think is a very safe investment. So today we're going to go through one of them. Today we're going to go through interest rate risk. Interest rate risk is when you hold a fixed income instrument. Maybe you have CDs in your retirement accounts or bonds or T-bills and other safe stuff in your retirement account. And maybe you bought those in 2019, let's say. So let's say you're only making a 2% interest rate on them. So you have a CD, you're making 2%. This is your CD, this is you. You belong here. Okay, and you're making 2% interest on that CD. And let's say rates go up, right? Interest rates go up. We've been through that. And now Joe Schmo can go out into the world and he can get a nicer looking CD at 6%. Well, if you hold your CD and you wait for it to mature, that doesn't really matter. You're missing out on the 6%, but you're holding on to your CD and you get your 2. What happens if you need to sell your 2% CD so you can go, I don't know, buy a condo? Or if you sell it because you're taking retirement distributions from your account? Can you really sell it for what you bought it for? If you paid $1,000, can you really sell this 2% CD to the market when Joe Schmo can go out and get one paying 6%? Can you really sell it for what you bought it for? The answer is no. You have to sell it at a discount. And therefore, you can lose money in what are otherwise considered very safe investments like CDs and like bonds if you need to sell them. So, this is not personalized advice. This is education, but make sure you're speaking to your personal financial advisor and make sure the fixed income portion of your retirement account appropriately mitigates interest rate risk for your situation. I'm Tim Froberg from Finest Retirement Services. I'll see you at the next video.